and welcome. This is Mary Ellen McGonagle with your MEM Edge show, brought to you each and every Friday afternoon. This is the show where we put you in front of where the action is in the broader markets, and lots to cover. Very interesting week, certainly from my work. As many of you know, I focus on these high growth stocks. I'm looking for those outperformers. So we had a little bit of a bumpiness there, but we're going to get into that and a whole lot more. So today's agenda, of course, we're going to take a look at the current markets, drill down, see what the backdrop is. All of my work and this show is designed to help prepare you not only for next week, but going forward. We want to make sure that you have your arms around not only where the markets are, but where they may be headed, also individually as far as groups and sectors. We're going to drill down there. There are themes within the markets, and they are continuing to shape up earnings season. We are just completed week 3, so lots of interesting themes that are continuing to shape up earnings. We're going to take a look at companies that reported this week, high visibility type names, high market cap as well, and take a look at their impact. Also, a lot of big names due to report next week as well. And we've seen this week that the numbers certainly had an impact on the broader markets. We're seeing a move into financial stocks. A lot of these smaller bank names, really a ton of them, have reported their earnings this week. So I'm going to share with you ways that you can identify these turnarounds. A lot of these, particularly the smaller bank names, are really down and out, but they're coming in with good numbers and they are exhibiting signs of turning around. We're going to get into that. And then playing the gap up in stocks. This is something that we examined last week, and those stocks did go higher from last week. And this is another theme, if you will, that is continuing to mark the markets. Lots of names that gapped up, and so we're going to take a look at some of the more prominent names there as well, with an eye toward a continued advance in those stocks. As always, I like to take a quick look at some of the headlines from last week. We want to create some sort of framework or backdrop to what is developing and evolving in the markets. U.S.-China tensions are continuing to heat up. As many of you may know, Trump did close the China consulate in Houston, and China did in fact strike back by closing one of the consulates in China, one of the U.S. consulates. So that's one of many areas. Also a lot of bumpiness in trade talks as well. Weekly jobless claims, they actually broke a trend yesterday, and there was an increase, and that really rattled the markets quite a bit. So they were up by 109,000 cases, but new home sales jumped, the strongest rate in 13 years. We'll take a look at that area and some of the ways to play the move into home sales. And also, unfortunately, new virus cases have doubled over the past 6 weeks. So we're continuing to see an increase there. That was another item of news that caused tailwinds this week. And lastly, there is talk continuing of an additional stimulus measure. There is certainly an anticipation that will pass, but it does continue to remain under debate. We're not quite through the hoops there. And that, again, was another headline news item that did hold the markets back this week. So let's go ahead, before we get into the broader markets and those underlying sectors and stocks, I did want to share with you a chart of a stock that I use as a way to help you, if you will, embrace or certainly understand my approach to the broader markets. This is an example of a weekly price chart for Ring Central, RNG. It has waffled a bit more recently, so this is a dated chart, but more importantly, what I've done on this weekly chart, this is taking us back, this base breakout in the beginning of 2017. You can see that I have these arrows marked on these various weekly bars. And for the most part, they are on up weeks. These arrows are identifying when RingCentral reported their quarterly earnings results. And for the most part, coming out of this base back here in 2017, back here it was triple digit earnings growth, and the stock did pull back with that late 2018 bear market but continued to advance. So the net here is that earnings is a primary driver of these big winning stocks. This has been a big winner with my MEM Edge report. We're not involved with it right now, but more importantly is that focus on earnings. So as we get into today's show, a lot of what I am going to be reviewing are stocks where earnings are due. They have reported, but there is a significant relevance to that focus. So let's not waste any more time. Let's get right into the broader markets. And I'm going to share with you, we're going to take a quick look at the S&P 500 daily price chart. And we can see, I talked about the markets earlier in the week. They did approach and hit a near-term high. Of course, we're not back to these prior levels in February. And then later in the week, we did see a bit of a pullback. However, the RSI is still in positive territory. Stochastics are up here above this net neutral 50 in positive territory. And you can see how these stochastics, they are faster moving. They can trend downward and even break below this 50 level. However, that was this pullback. It was prior to this June pullback, a little bit of a red flag, if you will, but your RSI did remain positive during that period. So you're going to want to use each of these indicators together. And at the end of the day, the S&P is still in a confirmed uptrend. So let's go ahead and take it from here, drill down. We did see a little bit more in the way of sector rotation. So this is from StockCharts.com, that front page sector. You can access what's called a candle glance view. And I've gone ahead and added an RSI, a relative strength indicator, sorted it descending. So up here on this upper left area, these are your stronger industry groups. And this is something that we did point out last week as well. That was an interesting kind of a move, if you will, because for many, many weeks, 6, 8 weeks plus, it was all about technology, uh, commu- communication services, and retail. Locked down individuals and employees were driving certain areas higher, but we are starting to see a little bit of a shift into somewhat more defensive areas. And so up here at the forefront, basic materials, this is going to be all about the move into gold. Staples, we did see a couple of heavyweights report good numbers. I'm going to get into that in a bit. Uh, Consumer discretionary. Now, this is encouraging. The good old U.S. consumer. I also am going to share themes in this space as discretionary stocks are really holding up quite well. But another defensive area here with utilities and healthcare, I'm going to share with you, it did pull back. It had a very, let's just take a quick look. It had this really nice longer term base breakout, but it has faltered into the close of the week. And as we get into those industry groups, I'm going to share with you where the fall down was so that you can be aware of that. So let's take a look. Communication services, XLC, now languishing back here in the lower quartile, as is technology. Let's go ahead and take a quick look at this technology chart. It certainly bears a closer look, because take a look, as we've been noting in this show for many months now, it has definitely been a leading industry group. However, it is lagging a bit this week. This is a daily price chart. I will argue with you that the move is in no way over. Technology is an essential product, and they provide essential services. Very simply, from my work, it is a potential profit taking and a bit of a pullback, and one that can at some point be played, but would like to see that resume. It is still very much in an uptrend. We are in good standing there, pulling back just a bit. Now, we are going to drill down even further, pull the curtain back even more beyond these sectors. And I've gone ahead and populated this candle glance 2-month daily chart view with sub-industry groupings. So in addition, we have all of the broader market indices, small cap stocks. I've added semiconductor. IGV is that software ETF. We also have the VIX. We can take a quick look at that, and transportations, as well as biotechnology. Again, that RSI indicator and descending. Take a look, gold stocks. Now, I've been mentioning this over the last couple of weeks. It's not an area that I traffic in, if you will, but we can see that it's had a very explosive move this week. If we have time, I'm going to get in because they're and take a look at some of the underlying stocks. Most of them are going to be a bit extended. We can see the RSI overbought, but there is a lot in the way of arguments that gold, this move indeed could advance further. Take a look at these volume characteristics on this upside here. So that's an area, certainly if you're not involved in, it can be a nice hedge if you're in those tech stocks to kind of counterbalance. Transportation, we did have a couple of other names report positive earnings, but I do want to move down here further because small cap stocks of the broader indices really held in remarkably well. I wrote an article on Monday about this fact and highlighted a stock that has continued to advance. So small cap stocks move into that area is quite bullish. Move into small caps is very common in a bear market recovery period. So have been waiting for that. And in fact, we are seeing small cap stocks, not overly vibrant, but remaining positive. So I talked about the fact that healthcare did pull back later in the week, and it has everything to do with biotechs. This is IBB, the growthier ETF for biotechs, and you can see really has pulled back rather dramatically, down over 5% for the week, finding support at this upward trending 50-day simple moving average. So we're okay there. It is finding support. However, the RSI did dip down here below that 50, and we're getting a little bit of a negative signal here. This could be more indication of a risk off environment, a move into more defensive areas. Certainly 98% of biotech stocks do not have earnings, so that very well could be it. Quick peek here at volatility. We're hanging in here in that mid-20s, so no real concerns going forward, although we did have a bit of a bumpy ride last week. So let's go ahead and drill down further and take a look at some of these other areas that I have mentioned to you that are seeing moves. I'm going to go ahead and start with this move into financials. So what I've done here, this is that sector summary here listing the various sectors by performance for the week. Simply click on that sector name, and you can see that bank stocks were top performers this week, up over 3%. So now what we can do, and you're going to see a lot of big numbers here, because again, these smaller bank stocks, a lot of them are lower priced. They did have significant moves, but they also had huge moves to the downside. So more upside ahead for those that have come in with numbers that would support that. So what we can do from here, it is going to sort it by performance. So a number of ways that you can do this. Some of these smaller names are super small. If you sort it by this SCTR rating, this is going to provide you with the more technically sound names listed up first. 99 is the highest that that particular ranking can go. So if you're on the prowl for a potential turnaround stock, what I would suggest is that you can hover your ticker symbol, your pointer, over a ticker symbol. And so what we're on the prowl for are names that are potentially turning. So here is an example, IBTX, not a lot in the way of volume, but more to the technical an analysis of this chart. This particular stock is just at this 200-day simple moving average. That is your blue line. And take a look, this moving average convergence divergence MACD, you're looking for that black line up through the red as a bullish signal. So we're just getting that today. And the RSI is positive. So a price break above that 200 with your outlying other positive signals would be quite bullish for this stock. Let's go ahead and take a look at one other name. And this is an exercise that you could, in fact, run a screen, and you'll be able to identify these potential turnaround candidates. So here is another name. This is FBK, a little bit more vibrant as far as that volume, and that is something that is constructive as far as liquidity. It's not going to bounce around as much, but very similar characteristics. This MACD black line up through the red, and in addition, it turned positive, very bullish there. Your RSI is trending upward and above 50, and we can see that the price has broken above these simple moving averages. Stock trading at about 26. It could easily trade up to this 29.30 level, and then you are going to watch for potential resistance again at that 200-day. But I like the volume characteristic here. Nice volume earlier on the week on this big move, and the stock is remaining positive. So that's a look at the financials. I'm going to take a very quick break here. When we get back, we have lots more to cover. We'll be right back. During every bull market, there are a select set of stocks that far outpace their peers. They trade much higher and much faster than the rest of the markets. The reason? These select stocks have a set of characteristics that history has proven are common among big winning stocks. My easy-to-follow course will teach you the skills of a lifetime so you can learn how to uncover and then successfully trade these fast-moving stocks. Take my 5-part course now by going to meminvestmentresearch.com for this limited time offer. And we are back. Let's take a quick look. I'm just going to share 3, maybe 4 stocks that reported last week, bellwether, better known names, and see how the markets responded, and then swing right into those stocks that have earnings that are due next week, big week next week, certainly among those bigger FANG stocks. So Tesla did come out with numbers. They were really quite constructive and quite good. However, the stock did sell off. And so what we can see from here is that the Tesla did find support at this upward trending 21-day simple moving average. But it was interesting to see, despite coming out with stellar numbers, the markets were not impressed. CMG, this is Chipotle, another very vibrant in a confirmed uptrend stock that has been an outperformer. They also came out with their numbers, and again, they sold off fairly sharply as well. So what we are getting a sense of here is that those stocks that are what I call priced for perfection, going into the report, they're hitting a new high after having already had extensive moves. The markets are not always rewarding those types of names. So we're going to keep an eye out and see if that type of behavior continues, because you are going to want to know that about those stocks that you own going into earnings. Now, this is ISRG, Intuitive Surgical, and take a look, because unlike Chipotle and Tesla, ISRG really had been sitting out the rally. You can see it had a nice advance out of this bear market, but for the most part had been languishing. Came out with numbers that were surprised to the upside, and take a look at that advance. So again, just based on these handful of names, you get a sense that those stocks that have been less vibrant, less of an outperformer, come in with earnings above estimates, are being more handily or more readily rewarded. Now let's take a minute, and we are going to take a look, just so you're aware of some of these bigger names that are due to report next week. Amazon is going to be coming out on Thursday with their numbers. We can see a bit of stalling action here as the stock, the RSI, is trending toward that net neutral. And oftentimes when you see a stock consolidate or pull back, you'll see that MACD trending downward, but we are still in positive territory all around. So it will be interesting. Amazon announced last quarter that they are going to be outlaying a ton of capital in the way of expenditures, and that should easily impact their earnings. So that will be an interesting number to watch to see how the markets respond. Alphabet is also due to report on Thursday. They're all about advertising sales, so that will be interesting, but by and large, remaining in an uptrend. Very large, well, certainly not, didn't start out that way, but it's certainly a big outperformer among software is Shopify. And I'm actually encouraged that the stock is pulling back going into their earnings as opposed to being up here and just again priced for perfection. But that is a number that will most likely be very closely watched. It's been really a poster stock for lockdown as these retailers are migrating to Shopify's online retail software platform. DXCM, not overly well known, but they do provide medical products to diabetics, so that will be one to keep an eye on. Now, the other thing that I did want to review with you are stocks that came out with numbers, and two items we're going to share. One is companies that came out with numbers that were positive and then subsequently had base breakouts. And that is a very bullish pattern, and it is even more bullish when it occurs after, I'm sorry, the base breakout is even more bullish when it occurs on big earnings. So here we're looking at PCAR, an auto company. Here is that reported numbers. Take a look. The stock breaks out, huge volume, and oftentimes that is just the beginning of a significant advance. Another base breakout on earnings is a company that provides, among other things, rental uniforms to hospitals as well as to restaurants. And certainly they have faltered a bit on that restaurant area, but hospitals have picked up some of that slack. And then they also have an additional revenue source by way of first aid products, and that saw significant growth. So here is CTAS daily price chart. Take a look. Beautiful, nice base breakout, big volume, and as reported earlier, this is a very bullish chart. KMB, this I talked to you about some of these consumer staples. Some of you, I'm sure, will recall the hoarding, if you will, of tissue paper, and this company was one of the primary beneficiaries. Kimberly-Clark, KMB, not the most beautiful chart, but it did break out of this flat base on big volume. Another phenom that we mentioned earlier that is still continuing to take place is stocks that are gapping up. So I'm going to share with you companies that did just that on strong earnings. This first company is Echo Global, ECHO. They are a transportation logistics company. There are a handful, or actually less, of names in that area as we see transports, trucking. We saw FedEx, UPS all come out with very good numbers. They need these companies to help guide the logistics of their deliveries. And so we can see this big gap up here on earnings. Take a look at the volume, and it has subsequently added on to that gap up. The company came out with very strong numbers. Another stock that did gap up on earnings, and this is where we're going to kind of swivel into the themes as far as what is continuing to take shape out there, not only in the economy, but then is being transferred to the stock market. This is HZO Marine Max, and you can see that this is this big, nice upward move here. Take a look, gapped up pulled back barely to that 10-day simple moving average and is continuing to advance. This company provides services to the residential pool service community, and with this lockdown, the inability to travel overseas, a lot of people are pouring money into not only their homes, but their outdoor areas, such as their pools. And in fact, we can take a quick look. But before we leave HDO, they did come in with numbers 116% ahead of estimates. Let's take a quick look at POOL. This is a company that already, they did report 16% above estimates. Another at-home residential pool. They're seeing big demand for in-ground pools to be built, as well as providing other services and supplies. So that's one theme that is taking place. I did mention to you this concept of, and the fact that housing starts, new home sales, all having explosive moves in June. And this is PHM, one of the premier home builders, Pulte Group. And we can see that this stock had that nice gap up out of this base, very bullish, big volume. And what I want to share with you is companies that had a similar phenomenon last quarter, just to kind of bring home that concept of how relevant that gap up can be. This is Chegg, CHGG, online provider for educational services. So we can see this is in May. They had this big gap up, huge move on big volume. And take a look. This is a daily chart. So for the next 8 trading sessions, it continued to trade much higher before pulling back, very natural after such an extensive move, and is continuing to advance. So paying attention to those gaps up on earnings is really makes quite a bit of sense. And let's go back to a couple of other companies that did report this week and gapped up in response. This company is also a supplier to that pool service, PNR, not quite as vibrant, but here's that gap up. It's Pentair daily price chart. This is a smaller company, so this gap up did not quite cause that breakout. So we have a little more work to do, but certainly somewhat interesting. As far as one other company that I did not mention earlier that is due to come out for earnings, and I think this is a really interesting chart and one that would be noted, well worth paying attention to. This is McDonald's, MCD, and take a look, because in addition to looking and sharing with you stocks that have had these base breakouts on earnings, I'm going to be on the prowl for MCD at about 204 to potentially exhibit similar characteristics. Analysts are calling for a pickup in their June sales, particularly with, of course, drive-through sales. So one last area that I did want to share with you as far as stocks that did gap up on earnings. This is Unilever, UN, and one of those consumer staple stocks that I mentioned that had really nice earnings. This is another lockdown play, if you will, that is continuing to take shape. We can see this big gap up on earnings, and the company did report a lot of people out there buying ice cream and mayonnaise, kind of just really soothing their frazzled nerves given the current pandemic and everything else that's going on. But UN had a nice move. Let's take a look at another consumer staple stock that came out with numbers and gapped up. This is Hershey Foods, and big sales in chocolate among lockdown. This is an international company, and what they found is that US sales really drove their numbers, and we can see that this gap up pushed the stock back up above this 200-day simple moving average with more potential upside. I like these volume characteristics that are taking shape here. So one other area that I did want to, or name, that did report last week that is worth noting, had a gap up, well known, is Twitter. Keep that on your radar as well, as it appears to be in a nice uptrend. I'm going to leave it at that. I urge you to take a look at my MEM Edge report. I'm going to keep you apprised of sector rotation, moves in and out, and in addition, point out stocks that are poised to greatly outperform the broader markets. Have a great weekend, everyone. See you next Friday.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.